What's up and welcome back, everyone. For those of you who don't know, my name is Wolf. I wanted to take a quick moment here and give you a little insight and give you a little bit of a screencast of what I usually look for and how I look for intraday setups and how I look for intraday plays and how I use different time frames, both daily and hourly, 5 minute, 20 minute, 15 minute, 30 minute, to kind of trigger into certain trades and certain stocks. So first and foremost, I just want to give you a quick layout. This is kind of how it looks like for me on my screen. This is not exact. It's not something that I'm using exactly like this day to day, but I just wanted to give a quick little cropped version of this so you can kind of get an idea of what it is that I look at and how I use different time frames in conjunction with daily setups to take action on a particular stock. So the stock in front of me here is Apple. I just recently created another take of this video and I kind of fucked it up. So I want you to take my word for it when I tell you that I said I would take Apple long against 290 here where I have the little arrow. Just take my word for it. Keep an eye on it. And just keep in mind that I'm saying this just as a quick little scalp and that I would use 290 give or take, and if I wanted to be really specific, I would use 290.3 as a stop here, just to keep an eye on it, just to see how things play out, both up and down, and just to see how things play out, whether positive or negative, just to give you like a little bit of an insight of what sort of levels I mark and how I mark them. So the reason that I said I would consider it a long here against 290 just a few minutes ago is the same reason that I considered Apple a long this morning. So this morning I posted a quick chart online, and this is the chart, and as you can see, Apple was pressed up against its daily time frame trend. So we had Apple in trend from August of last year until today, and if I extend this out, it's actually from June 3rd, 2019, and then it retested that trend today. In addition to this trend, you had the 100-day moving average, exponential moving average, just below at 282.6. So in theory, if this trend failed, and I would mark it with, what was the low yesterday? I would mark it with the low yesterday at 286. So call it 285.7 just to be safe, because sometimes they try to swing things to the low and rip them back. But if it would have broke 285.6 or 285.7, I would have been out, and I would have looked to the 100-day as my next level of support. But we ended up taking it long this morning, and I just want to kind of give a little bit of logic behind why it is that I took that particular spot rather than taking it yesterday or the day before or whatever. So the main reason here is I wanted to play it as close to this trend as possible. We got a retest of that trend this morning, very direct, and it also fell in line with yesterday's prior low. So it gave me two really solid go-to spots that I can point to and say, hey, if I fall below this level, I'm out. So this morning we took Apple. We took it pretty quickly, I want to say in the first 6 minutes. And the logic here was just, I want to take it against yesterday's low, and I want to play for a break back above the mid Bollinger Band here on a 5-minute basis. So for me, I play the 5-minute basis for intraday momentum. And I found that typically when you've got things that break below, so in this case, it broke below on 225 around 940, it just rode lower and lower and lower, bouncing between the lower band and the mid band until it broke back above. So I want to stay in this particular case. If I was going short here, I'd want to stay short until it broke back above, and I want to be stopped out as soon as it goes back above that mid band. And then from our point of view this morning, it was generally the opposite. So we were playing for a break back above with the hope that it holds and it continues higher. So the first thing I want to say is when you take a trade like this, you have to make sure that the other time frames that are larger are aligned with your thesis. There's no point in trying to take a 5-minute interval if the daily doesn't tell you that you can do it, or the 15-minute or the 30 or whatever. So if I take a look at the 15-minute basis told me that it was the same type of setup, generally within a range, as the 5-minute setup. So once we broke below this 15-minute basis, we got confirmation, we continued lower, and we hadn't been back above since. So in this particular case, I would want to play for a break above the 15-minute band, which just so happened to coincide with a break above the 5-minute band here. So knowing that those two time frames align, I'm good. I can say, all right, that's one way to play it. Next thing I take a look at is my 30-minute band. So how much room do I have? Are they all saying the same thing, or is one telling me something completely different? So in this particular case, I was under the impression that as soon as the 5-minute or 15-minute break above, I can play for an opening range breakout above the high that is set during that time, and I would have a little bit of room to call it 295 here. So if I just go back and I show you on a 5-minute basis, we broke above, we held that mid band, and then as soon as we broke the high previously this morning was 293.36. So as soon as we broke 293.36, in my head I know I got a little bit of upside, at least to 295, before I fall into a little bit of resistance. In this particular case, you see that our wicks of our candles here were around that 295 level. The last time frame I look at on an intraday basis, outside of like, daily, monthly, weekly levels, is a 60-minute basis. And on a 60-minute basis, it shows you a little bit more cleanly that as soon as we broke down, we haven't even come close to breaking back above that mid band. So if I'm using a 60-minute basis to tell me where I'll go with my trade, I was under the impression that if we broke above the 5 and 15-minute mid bull, I'd have a little bit of room at 295. So that would be my first selling point, which is where we scaled out a lot of our position. And then if we broke above on a 30-minute basis, I was under the impression or under the assumption that I could ride that until I get to the mid band on the 60-minute basis, give or take. So in this particular case, there's a really well-defined support level here where that line is. And if you look, we filled right at that support and right at that rejection of the 60-minute band. If I take a look at the indexes in general, you're going to see that it's pretty much going to show you similar things. It's going to show you that we're still in a downtrend on a 60-minute basis, and we have not broken above that mid band. So in general, things are still pointing from the upper left to the lower right. So I'm still a net seller, but there are opportunities to try to scalp, multiple points. I'm talking like 3 to 7 points on Apple, for example, and that's not even a volatile one like, let's say, a Roku or a Netflix or whatever. So I just wanted to give a little bit of thought process here live in real time, just so you can get an idea and get a little perspective. Hopefully this is something that is helpful. Again, this is all off the cuff. It's not in my studio. It's not like produced or anything like that. So hopefully it's a little bit of help, a little bit of insight. If you did find it useful, please like, comment, and subscribe. Please share the video as well. That way it helps others. And please don't forget to check out my website at www.everytimeicash.com. Feel free to reach out at www.everytimeicash.com/contact, and feel free to reach out to me directly on social media at everytimeicash. Till the next video, thank you for your time, and please like, comment, and subscribe. I just want to leave you with the note that we did say we would go long Apple against 290. We're sitting at 293 and change. So far, so good. At this point, I would elevate my stop and go from there. Thanks again. Thank you for watching. Stay tuned for more content. Like, comment, subscribe.